if you're brand new, just getting started with traction, these probably aren't the highest priority type things, but kind of showing you. And what we'll do, you kind of learn some concepts for doing other things in here. So first thing we want to do is talk about patronage dividends and how to get like your equity account set up in traction. So I'm starting out with the chart of accounts. And first thing, if you have patronage with the co-op and you get 1099s, you're going to want a revenue account for patronage dividends. So if you scroll down to your revenues, you want to look, make sure you don't have it already. Kind of shortcuts on this. If I do a control F and I type in PATRO, I can see I haven't set up any of those accounts. So I'm just going to go here in my chart of accounts to revenue. And in the revenue heading, I'm just going to hit the dot, 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 and I'm going to add an account there. And I'll pick the entity that this goes to. So if I have multiple entities that are going to get patronage dividend income, I can pick those multiple ones there. And then my account type, there will be an account type there for patronage dividend income that'll fill that name in there. Now, if you've got multiple co-ops that you're going to get patronage dividend income from, I would probably just set up a single account, run both of them through it. You'll still be able to kind of see easily which each one wants. If your accountant likes seeing the ones separately in separate accounts, you could set up a separate one with the name of the co-op and then set up a second one with the name of the second co-op. They can both go to the same account type. Again, I wouldn't typically do it that way, but if that's the way your accountant wants you to do it, you can do it that way. It's no big deal. So in my case, I'm just setting up a single one there, and we'll just do save and close. And that has now added a revenue account that I can have the dividends going to. So the next thing we want is up in our assets. We want to add an other asset, another long-term asset. This is for kind of the equity that we've got in the co-op. So the way co-ops work, probably most of you understand this, but just in case you don't, is that every year I get a 10, or most years I get a 1099 from the co-op. Some years I get a check, some years I don't. Some years the check's the same as that 1099 and the others it's not. Well, every year, if the 1099 is more than what you get paid, that difference is equity that you're building in the co-op. How it gets called, some people call it patronage, some call it equity, some call it an investment. Those amounts are kind of important to keep track of. If the co-op ever sells out, you get a big payment back, you can kind of offset that against it. So all that just to kind of get what Traction's going to do is in my other long-term assets here, I'm going to add a new account. And that new account, I'm going to pick the entity that patronage is through. My account type will be patronage stock. And this name, I want to be really specific. If I call it patronage stock, I'll do patronage stock, and then I'll do the name of the co-op. Maybe it's Keystone Co-op. Whatever the name of the co-op is. And this name should be something that means to you. If you kind of identify it as patronage or patronage investment or investment, however it is, we default it to patronage stock. That seems to be fairly common, but if you want a different name here, you can use a different name. The big one though, this opening balance, that is your total equity that you built up in that co-op up through the start of when you started using Traction. So my entity actually started using Traction. This is kind of a bad example back in 2022. So this would be the total that I'd accumulated as of January 1st, 2022. Now, if you don't know what that number is, you can put 0 in there. You can always go back and update this number. Where you could get it is a lot of times your accountant may keep track of it, the co-op may keep track of it. So that number, once you get that number, you can put that number in. If I maybe know that number is $10,000, I'm just going to put $10,000 in there. And that's kind of my starting point in this co-op account, this patronage account. So I've got $10,000 patronage stock in that co-op. So Once those accounts are set up, once the balance is there, the accounts are pretty well done. Just a matter then each year when you get the dividends. So we'll go through a situation. Let's say that I got dividends the end of 25 for this. So I will go to my account register, going to pick the checking account that I deposited that payment into. So if you got a real check, this is going to be the account that you're going to deposit it into. If you didn't get a check, you're going to do a $0 deposit to get it there. So I'm going to add a new deposit here, and I would pick out Keystone Co-op from the list. Now, big thing on this, if I've done these in the past, the easy button, I can do use previous transaction, select the previous one. That only works the first time or future times you do it. This is my first time doing a dividend with them. This was back in 25, so my deposit was actually done, we'll say December 31st, 25. And the way I'm going to do this is the first thing I want to do is pick out my patronage dividend income. So I will pick out that patronage dividend income. My description, maybe I'll say 2025 patronage. I'm going to put the amount here. So the amount here, this is the amount off the 1099, not necessarily the amount that I got paid, but the amount off the 1099. Now, in my case, maybe the check that I got paid was actually just $4,000. So I need to change that. Deposit's not $10,000, it's $4,000. And when I change that, you'll see I've got a difference of $6,000 that I need to explain. Now, this one's the one that kind of messes with your mind a little bit, but what I'm going to want to do is add another row, go to other, and I'm going to pick out down in my other assets, I'm going to pick out that patronage stock and leave that $6,000. So that's 2025 equity. And my memo down here, I'll just put a nice memo in there. So the key to this, that minus 6,000, that seems kind of weird. It's like it's a minus 6,000. That really should be increasing my equity. And it's what you got to do to make it work. And the logic on why it's minus here, it's a deposit. So deposits are typically meant for income. Negative income is like I'm buying something. So ultimately, to prove that, though, if I save this and go to my chart of accounts, what I should see in my chart of accounts now, if I go up to my other assets, we'll see our patronage has gone up by that $6,000. If I set my date range back to 25, I can see my beginning balance was $10,000 to 6,000. So I can see that that minus 6,000 did increase the balance of it. And if I set this back to, we're just going to set my chart of accounts back so it's last year. If I scroll down to my revenue, I should see my patronage dividend income being the full 10,000. So it did what I wanted. I've got the 10,000 that matches the 1099. I got the $4,000 as a deposit and the $6,000 in equity. And again, the important one, this is just kind of a weird one that you're only going to do once a year. The next year rolls around, you're probably not going to remember what to do. So, I mean, 2026 rolls around, I don't remember how to do it. This is a nice part, that use previous transactions. I can just do use previous transactions, pick the previous year. And if I did a good job with these descriptions, I know what to fill out for the 26 dividends. So there's a lot thrown at you. Any questions? Cool. Okay. So the next one we'll do is how to keep track of a brokerage account. So let's say I've got a brokerage account, and that brokerage account's what I'm using for hedges out there. Now, brokerage accounts, I know some people will set them up as other assets. I would tend to set them up, I'll show you how I would do it. I tend to set them up as bank accounts. And once I kind of show you what you can do with it, you'll kind of understand why I do it as a bank account. So I'm going to go to my bank accounts here, bank and cash accounts. And I'm going to add an account here. An account type, I'm just going to call this checking. And I'm going to call this, if it's RJ Reynolds, this is the broker that I'm working with. Put in, oh, it looks like I already got one in there. So, and my opening balance, this is going to be the closed position balance on my hedging account. So hedging accounts, you get those brokerage statements. There's usually a section, a closed section that's got the actual cash balance in their cash balance. They could have names like that. It's not the balance that includes any open transactions. So this is actually the closed position, the available cash, things like that. So if I started the year with $10,000, I'll just put $10,000 in there as my starting point and save, and that's now got it as an asset on my books. So what'll happen when I go to the account register, I'm going to see that account in here along with my checking account. So next thing we'll do is kind of talk about how you do transactions that deal with it. So first thing, if maybe there's a margin call, and if I had to put money into that account from my checking account, easiest way to do that is I just go into my checking account. If that margin call was today, I like to add those as a transfer just because I'm lazy and it's an easy way to do it. So since I've got it set up as a bank account, I can just say, hey, if we had to move $5,000 from my real checking account to that hedging account, I can put in a nice memo there. Whatever I want to say there. So if I go now and look at that brokerage account, I'm going to see now I can see that amount's getting moved in there so I can see the transactions going back and forth. So the next thing is what happens if I do a trade and that trade is closed now? Let's say I had a corn hedge that's closed out and I had a $4,000 loss on that hedge. Well, I start thinking about that. Okay, losses, I'm in a bank account here, a checking account. I'm going to treat my losses just as a payment. So I do payment there. My contact would be the name of the broker. So I think I said it. Kokomo Hedging is my broker. I've not set them up as a contact yet, so I'm just going to add them in here. And I'll go in, and what I'm going to do is I'm going to pick out, this I should have, we may have missed it, a hedging gain and loss account. Let's look and see. Uh-oh, I have not set up a hedging gain and loss account yet, so no problem. I'm going to need at some point an account for all those hedging gains and losses. So I would make a new account here. And this account is actually not going to be in the expenses, but in the revenues. And the account type is going to be hedging gains and losses. Now here again, to me, one hedging gain and loss account is probably good enough. If you had multiple brokerage statements, you wanted a separate one for each broker, you could do it that way. I have seen people do a separate one for each crop. I don't think it's really necessary, but if you want a separate one for each crop, you definitely can do it. I don't like it just because it gets a little confusing. It adds a lot of accounts. It's easy to pick the wrong one. In my case, I'm just going to use that hedging gains and losses as a single account there. We'll go through right there is that account. So I should see it now if I look back down to my list, just making sure I've got it added there. My revenues. Let's see. And then my description, this is where I'll do a good description. I'll say loss on 10,000 bushels of 25 corn. And if that loss was, did I say $4,000? I'll do $4,000 there. And the key to this, I want to make sure that that hedging gain or loss gets added to the fields that relates to. So this case, it's my 25 corn that I had a hedge on. I'd go to my allocations, pick 25. I would pick my corn here and just allocate that across all my corn fields. So this way my gains and losses are getting shown as part of those field profitability side of it. Click Save and Close. Now I can see that brokerage statement has that $4,000 loss on it. So next thing, we'll do the other side of it. Let's say that I did another trade. This one was a trade. Maybe I'm actually doing some 2026 hedging, and I had a gain on that 2026 hedging. So a gain, I did a loss as a payment. Just going to do a gain as a deposit. Add new deposit, and I go to pick, and I'll see, looks like I missed. I set up Kokomo as a contact, and they're not showing here. Did anybody catch why? Let's go take a look at, we'll look at our contacts here. I'm going to filter my contacts, find that Kokomo hedging, edit it, and looks like, oops, when I set it up, I didn't say that it was a customer. To do a deposit, it needs to be marked as a customer, so real easy. I can go back and edit it and change it. And now when I go back to my account register and do a deposit into this hedging account, now I can pick them out. So right there it shows. So this time again, this time I've got a gain. We'll say I had a $5,000 gain. I will pick out my hedging gain and loss account. This is maybe gain on 2026 beans, we'll say. And maybe that was a $7,000 gain. And now I want to go in and allocate that, not my 25, but my 26. And pick out my soybeans here and just split it across all those. Click Save. And we'll see. As I'm going all this, then you can reconcile this just like you would a checking account. So at the end of the month, when I get my statement from the broker, all these amounts should match the amounts on the brokerage statement. I can go in and reconcile it. Everything works. I think the last transaction side of it, if I've got money that I take out of this and put back into my checking account, the advantage with this being a checking account, I can do transfers again. So if money's going from this, going back into my real checking account, I can just go in and add a transfer back to my checking account, put in the amount that went, and money back from hedging gains, whatever, a good description on it. And that gets everything updated there. And the last thing just to remember on this is that there's a lot of stuff here to remember. Once you do your first transactions, again, that previous transactions makes everything pretty nice. So if I've got another hedging loss in the future, as long as I pick out that Keystone Co-op, I can do previous not Keystone, but Kokomo, sorry guys. Got to pick the right vendor there. I can do previous transactions and use that previous one to fill it out. So first time through, you got to remember how to do it, but the previous transactions makes it easy. So any questions on that? Everybody's kind of quiet this morning.
Yeah, feel free to unmute yourself if you have any questions for Scott. That was a lot there covering hedging. I know we get that question all the time about the contact side of things. If you add a contact and you forget to choose customer, and that's probably why they're not appearing there. That's also the case where you have the same contact used for different entities. We run across that as well. Just making sure you pick all the entities for that contact. That way, if you're in a different account, that contact will show up there. Scott, I'm not seeing any questions yet.
Okay. So I think the last thing we'll go through, and this may be pushing it to get by 9:30, and anybody that was on a previous, one of the previous ones we did this, but I'm going to do it again, is go through a scenario where I'm going to buy a piece of equipment and take out a new loan with a trade-in. This one's kind of a complicated transaction, so it's one I kind of like to go through again. So let's say I'm buying a piece of equipment. I'm going to take out a new loan for that piece of equipment, and I'm going to trade a piece of equipment for it. So I'm going to start out in my chart of accounts, and I'm going to make sure I've got the accounts that I need. So I should have, this one should already be there. I should have my equipment account set up. So I've got like farming equipment, the account that it's being used for that equipment. If I'm taking out a new loan, I want to get that new loan set up. So I'll go down here to my notes payable long-term in the chart of accounts, and I'm going to add a new account. I'm going to make sure I've got the right entity here, the entity that's buying the equipment. My account type is going to be notes payable equipment. Use a good description here. So if this is case, now that description is going to be what's going to show on your balance sheet. So you don't want it to be too weird, but same time, you want to find a happy medium, something that's going to look good on your balance sheet, but also make sense to you. The balance owed, in this case, nothing is owed as of the start of traction. I'm actually going to do that when I buy the piece of equipment. But I do want to go in the details area and put the details here. So the details that you put in here, this is going to be used two different places. One is you do loan payments. This will be how we'll kind of calculate what the principal and interest is. This also is used on the market value balance sheet for showing the current portion of long-term debt. So I probably won't get into that today, but if you ever look at a market value balance sheet, you'll see a line for current portion of long-term debt. The values for your loans are what goes there. So the original amount here, this isn't going to be, these are just kind of notes used for calculation, but this is the amount that I'm going to borrow. So we'll say that I'm going to borrow 200,000 on it, not 20,000, but 200. Say our interest rate is 7%. The start date we'll say is 03/01/26. And we will say it is a 60-month loan, paid monthly, and it calculates our payments for us. I can change this if it's slightly different, which it likely will be. You can update it to what that actual payment is. Click Save. Again, that didn't do anything. It didn't add any value. We'll see the value in that loan is 0 at this point. So what I'm going to do now is show the purchase of the equipment. So I'm going to go through and say, okay, so I'm going to pick out my checking account. We'll say this purchase, what I actually did was that I bought that equipment, I took out a loan, and I also had a down payment on that equipment. So I'm going to go to my checking account, and I'm going to start with what I know. So I know I need to have a payment. I'll do add new payment, and I would pick out case credit from the list here. So I don't have case credit. I'm going to do new here, and Brian's comment about making sure that contacts get to the right entities. If you've got the time when you add a new contact here, the best way to make sure you get it right is just to do add details. So add details. I know if Traction Farms is also going to need case credit, I can pick them there. If I know that I'm probably going to have some refunds on things, I can set them up as a vendor and a customer. So that's kind of the area that if you do that, you can make sure you get it set up right. So, and the business name here is Case Credit, if I can spell. So I'm going to start with what I know. So we're going to say, okay, it is actually the amount that I've got to write a down payment for is $10,000. So I've got to have $10,000 there right now for the payment amount. The next thing I know, I'm going to look at that kind of the closing statement for I bought the equipment. So I'm going to start out next. We'll say that tractor actually cost us $250,000. This is before trade-ins or anything like that. It's the price on that tractor. So I'll go down to my other assets in here, and I'm going to, my assets area, I'm going to pick out my equipment account, farming equipment there. And I'll just say the actual cost of that tractor is $250,000. I'm going to add another row. The next thing I'm going to do is we'll say that I actually had a trade-in. And that trade in, I got $40,000 for that trade in. Now, that trade in, I'm going to pick that same farming equipment account. So I'll just start picking out. I'm going to type here, get to farming equipment, and here I'll make a note. And the amount they gave us for the trade-in, I'm going to enter as a negative value. So they will say in this case, they gave us $40,000 for that trade-in. So I will do a minus $40,000. Still off now. Looks like $200,000. And the last thing I'll have in here is that I know I'm going to have a borrowing on it. I said that loan actually is going to be $200,000. So I'll go down through my liabilities, find my liabilities, and find that case credit tractor loan. And that 200,000 is right. So everything is balanced at this point. The end result of it, I'm adding $250,000 to my equipment. I'm taking $40,000 off for the trade-in, and I'm setting that loan up for $200,000 with a $10,000 check. So just to show to make sure everything's right, I can see my bank account's all updated. The $10,000 came out of it. If I go to my chart of accounts and I look at that notes payable, I can see that notes payable. Let me get my dates right. We'll switch our dates to this year. I had it at last year. So now if I see for this year, I can see that loan is $200,000. And if I drill down into that equipment, I can see that equipment went up by 250 and went down by 40,000. Now, this 40,000 that they gave you for the trade-in, at the end of the year, your accountant's going to go in. He's probably going to he's going to want to know some things differently. He's going to know what the cost was on that equipment, the accumulated depreciation, the depreciation. Best way to do is just plug it in the way the statement is. At the end of the year, your accountant, just let him know how you did it. Let him kind of show how you did it in Traction. He'll give you a journal entry and help you fix it at the end of the year. I think that was what Natasha was asking there. So this is kind of the easy button for doing it. The problem, even if you're basing it off the accumulated depreciation on the statements, most of the time they're going to have current year depreciation and some other things like that. So I see a lot of people trying to muck around and just get this perfect. Most of the time it's really tough to get it to match what your CPA does. So I would tend to recommend just put it in the easy way, let your CPA know how you did it, and let them help you at the end of the year how to do it.
Scott, when you do that step, is it like a journal entry?
It would be, yes. So what your
Okay.
accountant should do is at the end of the year, if you just kind of in reports, kind of to let them, the reports that are really good to give them at the end of the year, if you go to accounting, the general ledger detail report. So this would be a report I would not do all. I would do one for each of your entities. Go in, and if I'm doing 25, get it for 25. That report's going to show them all the ins and all the outs on it. The other one, and this one's a bit extreme, but the other one that you can give them in this cash area is a journal entry report. So the journal entry report, if I filter this by date, and again, do this for last year, this will be a big report. You probably don't want to print it, and the things that will help you filter it down, you can actually filter it to show hide voiding, hide hidden entries. We'll start cutting it down. So this is going to be the actual journal entries made for every transaction for the year. So in my case, it's a demo account that you can play around with, so I don't have a lot in here. I think the other, I'd say for the accountant side, if your accountant's comfortable with it, if you're comfortable with it, probably the easy button is you can go into this account management. You can actually go in and add your accountant in here as a user and let him have access to Traction. Even if your accountant's used to QuickBooks, Traction's pretty easy. If all they really need to do is go to the reports area. It's easy for them. They're going to understand the reports. They can get the information they need there. But then the journal entry, once they give you a journal entry, you go to chart of accounts, do a new journal entry, and they'll give you something that says debit this account, credit that account, and that's where you do it there.
We had another suggestion or comment about when let's say you're in the account register and you're adding a payment. Um, yeah, I ran across this a few times, just something to be aware of. If you add a new payment there, Scott, and you're adding a new contact there, you can just type anything in there. Yeah, there you go. So yeah, if you don't hit add details here, that add details is where you go finish out the contact information, right? The address, the phone number. That little more button there is pretty powerful because at the bottom is where, if this is a 1099 vendor, this is where you want to choose yes. So that's going to be a very important box there to fill out if it's a 1099 vendor. So if you are in a hurry and adding contacts on the fly, you may not get to this screen right away, so it's easy to forget. So you might have to go back here in the future at some point and make sure if this is a 1099 contact, make sure you select that option. And that can be done by going to contacts on the left there, left nav. Yep, thanks, Amy, for that one.
Cool. Okay.
Any other questions? Yeah. Well, Scott, you covered quite a bit here this morning. Well, yeah, feel free to type a question in there or unmute yourself. I'll just cover the very last slide for this morning and we'll just uh, adjourn for today. So we do have some webinars coming up. Next week we have Accounting 101 that you can sign up on our website. Very excited that we just released some new webinars for April. Now, these are not available to sign up yet on our website, but they will be up there soon. The big one there is land agreements and invoicing on April 8th. And so, if everything goes right today, there's a significant update coming out tomorrow that will impact land agreements. So, fingers crossed, you'll see those release notes come through tomorrow. And we're quite excited to share some really cool things that we're doing with land agreements and invoicing. So, mark your calendars for April 8th. And then we have quite a few other ones with like the machine integrations with Climate and John Deere, giving you a review on that since we're getting close to spring. Then we have some other type of webinars for accounts payables and field profit center analysis. So that is all we have for today. I'm not seeing any other questions, Scott. So I think we'll just close it down. I do appreciate you all joining, and we will talk to you all on the next webinar. Thank you.